So, should we buy or sell NXP Semiconductors? First off, read this disclaimer carefully. Then do your good deed of today by liking and subscribing. So I have a theme called mobile robots in the megatrends. And NXP, they do make semiconductors. 5% from the 52-week low, but we are 38% away from the 52-week highs. Here is the company's website, life-changing technology for improved healthcare. So they have exposure to a lot of different industries: mobile, automotive, communication, smart cities, smart home, industrial. When we go here to the charts, big picture, weekly data points, we see here, going a bit back, that the red 200-week moving average has been very important in the past as resistance and support. And it's been very important recently as well. A very good buy here. We did stop dead on the red 200-week moving average this week. That's a fact right there in the chart. The previous time it tested that moving average, you could have gotten a 32% gain in 35 days. That is pretty good. Does that mean that it is guaranteed to happen this time as well? Obviously not. But the 200-week moving average has been a very strong support level for the bulls. And given that the bulls were able to almost surgically stop the bears at that moving average, it shows us that there is definitively buyers at that level. So that's interesting. When we look a bit here at the recent time cycles, we do see that there are some shorter time cycles as well. You see even here during this rally, rise, decline, rise, decline, rise, decline, rise, decline. So there are shorter term time cycles that have functioned. And the time cycles also suggest that we have a rising phase around the corner. Looking at the daily data point, we are below all the moving averages. So there's that. That's obviously not that bullish. Looking at these other indicators, when it comes to RSI and PPO, we are in a bit of a messy territory. We are not yet at levels that have a very high probability of leading to a bounce, but we also are at levels where we usually do not go that much lower as well. On the daily data points, we have something similar. We usually bounce here from the low end of RSI here. We are not there yet, but we are pretty close. This previous very strong rally, it did come from that RSI level. Similar thing here with the PPOs. Given that the 200-week has worked really well in the recent and also distant past, I will give the bulls a 6 here. They did stop very accurately on that level. As long as it holds, there's reasons to be bullish on the technicals. Let's look at the seasonality. So to the right here, we do see that over the last 5 years in green, 7 years in blue, 10 years in red, we usually see a bit more weakness into mid-ish October. To the left here, we do see that October, November, December are the strongest, well, some of the strongest months. It's the strongest period, at least for the NXPI. The last 10 years, we do see that October and November are very strong. Especially November is the strongest month. Closes higher 78% of the time and has the highest average return. Looking at all the data, 13 years, October and November are strong. They really are. December pulls back. Well, it's not a weak month, but it's a bit weaker. But then January and February are strong. So from October to February, we have the strongest series of months for the NXP. I will give the bulls here a 6 on the seasonality. This is good seasonality. It just is. Let's look at the fundamentals. So here is SAX, number 3 hold, but B value, B growth, and B momentum. Industry rank top 38%, semiconductor, analog, and mixed. There is even a yield at 2.24%, market cap approaching 40 billion US dollars. The insiders are sell, buy, sell, buy. So the insiders are a bit mixed here when we go to the consensus estimates. 28 analysts are covering the stock. Average price target is 35-ish% above us. Highest is 76% above us, and the lowest is 6% above us. I will give the fundamentals a 5 here. This is definitively an interesting combo of data points here. Let's look at relative performance long term. 96% with the S&P 500, 94% with XLK, which is the technology ETF, 97% with the semiconductors ETF, SMH, 91% with the robotics and automation ETF, Robo. Short term, 73% S&P 500, 77% with tech ETF, 88% with the semiconductors ETF, and 77% with the robotics ETF. So what happens with the SMH is going to have a very significant impact on NXPI. So in this case, there's problems, really are problems, because the red 200-week moving average was a very good time to turn bullish in March of 2020, but the problem is when we zoom into our current time, we did close clearly below the 200-week. There were bulls who tried to get us above it, but there were not enough bulls, so we now have a very big deal resistance level. Looking at the daily data points, we are below like all the moving averages. That's not good. Looking at these other indicators, we are not yet at a level on the RSI and PPO that is like a very high probability of leading to a bounce yet, but we are close. Looking at the daily data points, we usually do not get more oversold. That's the thing. You can see back here in early of 2021. Let's zoom out a bit. Here, we did get bounces from this level. Let's compare NXPI with the semiconductors ETF. Yeah, messy. Because here we do form a bit of a low, but then we have now rallied back to a prior, it is now a resistance level. We have resistance back here and also here. So messy, just messy. No like clear signal. Well, on the RSI here a bit, yeah, there is a bit of a tendency for us to be rejected here from the upper end of RSI, which means that NXPI has a bit of a tendency to underperform the semiconductors ETF when that happens. Looking at the seasonality here, yeah, NXPI, it does actually have a tendency to underperform the semiconductors ETF into late October, so that also fits with what we saw here on daily RSI. I give the relative performance a -3 here to the bears. I do think that what happened with the semiconductors ETF, which is such a big deal, it is the big basket, and these basket ETFs, they can just dominate whatever all the components within it. We do, however, end up with a 3.5 in favor of the bulls. 200 weekly moving average support is the big thing here for NXPI. So yeah, interesting stuff. So we do have some time left. Let's look at some of the stocks within the semiconductor ETF. So we have Nvidia. I did analyze Nvidia not that far back. The 200-week moving average was very important, and now it is resistance. Looking at this week, the wick of the candlestick, we went up there, which we tried. So the bulls, they fully understand that getting above the 200 week is very, very important, but we were rejected. We did not have buyers that could keep us above that level. That's unfortunate. Looking at the daily data points here, we were rejected from the 10-day moving average. We were rejected from the 10-day here as well. Surgical here, and getting rejected from the 10-day moving average, it is not a sign of strength. So this is very unfortunate for Nvidia. That doesn't mean that Nvidia cannot form a low. It's just that we should expect the bulls to do something a bit more ambitious than what we have seen so far. Because if the bulls do not act when they are supposed to act, it could just mean that we don't really have that many bulls sitting on the fence, and that is something that the bears will take note of, and then the bears will build big short positions. Texas Instruments incorporated it, and also you have the effect where bulls that put on a bull trade and lose money, they will then just, well, I'm just going to go short then and make money, and then of course you have the bears getting new recruits, and that is going to add to the selling pressure, and it quickly can become a self-reinforcing feedback loop. Anyway, here is Texas Instruments Incorporated. Yeah, on the weeklies here, it's just kind of hovering a bit in midair, just messy, no like clear signal. On the dailies, yeah, I do prefer to get a bit of a clean signal. Let's look at the RSI, PPOs. Yeah, nothing really here on the weeklies. Yeah, but what about the dailies? Yeah, we are approaching a level on the RSI that in the past, going back a few years, it has triggered some mean reversions to the upside. Some of these mean reversions here during the downtrend can be big. This rally, as an example, approaching 19%. It was still in a downtrend. It did go lower, but 19% is that's a good gain. And you don't want to be like massively short and have the position go 19% against you. Next on the list is ASML Holdings. Yeah, going back, to that red 200-week moving average, it's been important in the past, and it was important back here in July. Nice, just a very good time to turn bullish. If you bought it around here, you would have made money. But as you can see, the last 2 weeks, we are clearly below it. The bulls tried to go up there, but didn't even get up there. That's not good. Here are the dailies. Oh, we were rejected from the 5-day moving average. You are not really supposed to be rejected from the 5-day moving average, in a bullish environment. Yeah, that's very weak, very, very weak performance here from the bulls. They just are not showing much at all. Which could also mean that we do have bulls that are flipping over to the bear team. On the daily RSI, though, this is not really appealing from a bearish perspective either. If you look at the previous times we had these readings going short at these levels, also on like the green 50-day PPO, it's not been a good time to go short either. So, yeah. Here is Qualcomm Incorporated. Very famous semiconductor company that with massive presence in the mobile space. 200-week moving average in red, super important. And it was, yeah, okay, so this is massive because we did actually close a bit below it, but not fiercely below it. You see here that during the week we were much higher. So this one is just messy. There were clearly bulls way up here, but then we closed lower, but we didn't close clearly below the 200-week. Okay, so let's look at the daily data points. Yeah, we do potentially, we have some maybe horizontal support from back here in 2020 August. Let's look at RSI and PPO. We are approaching a level that is interesting from a more bullish perspective. Also here on the PPOs, on the daily data points. Yeah, we have been a bit lower in the past, but the previous time we had these kinds of lows, it was also late in the bearish phase, and when you did get a mean reversion, like this mean reversion here as an example, all of a sudden you have like a approaching a 60% rally. Yeah, so we have looked at a bunch of stuff here. There are conflicting messages. It's just the type of market we have now. And as I said in the previous video, we do have a huge geopolitical events that are frankly more important, but way less predictable than these factors. But yeah, whatever you do, of course, try to have a market neutral portfolio and be very nimble.